The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more. Our Stablecoins Securities SEC Chair Gary Gensler seems to think so, telling the American Bar Association last week that stock tokens and stablecoins backed by securities might be treated as securities under U.S. law. Joining us now to discuss is Carlos Domingo, CEO of Securitize, a digital asset securities firm. Welcome to the show, Carlos. So U.S. regulators and policymakers are increasingly sounding the alarm of private stablecoins. In your view, are stablecoin securities?
I think what they said is not that stable coins are securities, right? They said that stable coins that are backed by securities might actually be a security itself because it's backed not by a coin, like let's say by a dollar and cash assets, but by, commercial paper or other things. So I think those are two different things. I think that, worst comes to the worst, they can just, keep the cash or keep very, very stable, like, treasury notes, things like that are not necessarily securities and that the stablecoin can operate. I think stablecoins are a valuable part of the ecosystem. They've been growing a lot. There's companies like Securitize going public. For us that we do digital asset securities, we also need stablecoins because we want the securities and the cash on chain to be represented in the same ledger and the same technology. So we're hoping that there will be a way for this market to continue growing.
Just to sort of elaborate on that a little bit further, though, do we really even know what would make a stablecoin a security? I mean, do you feel like that there's clarity on that? Because with a lot of securities laws in the United States, it's very confusing, right? So is the idea that a stablecoin is a security if it's backed by securities, or like how would somebody know if a stablecoin is a security or not?
That's a good point. So typically in the US, if something is a security or not, is you use the Howey test, right? So you're making money because somebody else is providing, is using your money to produce value that comes back to you. Like you buy up shares of Apple, and then Apple is using that money to produce iPhones, and then the shares go up or they give you a dividend. In the case of stablecoins, the investors in the stablecoins, the ones that are purchasing the stablecoins, are certainly not expecting any type of reward or value appreciation over time, right? It's actually the people that are produce the stablecoins that, in order to make some money, they actually take that cash and they invest it in pretty safe and conservative assets, but nevertheless securities that provide some yield, and that's a revenue stream for the company issuing the stablecoin, right? So from that perspective, it's a bit confusing because it's not very clear that it has to be a security. Like when you buy, some of the tokens that obviously give you like an interest or a yield or things like that because somebody else is investing that money on your behalf, that's clearly a security. But in the case of a stablecoin, you're not expecting any price appreciation. So to me, it's not that clear that they are securities. And certainly there's no regulatory clarity. This thing that we heard a couple of days ago about being securities if the underlying cash is actually invested in other securities. That was the first time I heard that.
So Carlos, what will we see? Do you think down the road we could see a world where there are basically two types of stable coins? One, which is what we expect a stable coin to be, which is cash backed, 100% cash backed, or 97% with the rest in T-bills and what have you. And then another type of stable coin, which is more like a security. Can the world function with two types of stable coins operating simultaneously? Or do you think that regulators will just put a stop to the more security like stable coin?
So in some geography, I'm in Europe now, and I was actually talking to one of the largest banks here this morning, and they were saying to me, like, look, if we create a stable coin and we can actually invest the underlying cash that we collect, let's say billions of dollars, into something else because they have negative interest rates here, nobody's going to do stable coins. So kind of the fact that you can invest the underlying money into something that produces some yield and is cash-like, but not actually just cash, it incentivizes the creation of stable coins in a scenario where interests are very low or even negative, like we have in Europe now here, right? So I think that hopefully we'll have regulatory clarity about what to do, what not to do, and then that will lead to just one type of stable coins that can actually be invested in something extremely obviously conservative, but with some sort of yield generating to cover for the cost and for the effort of the companies producing the stable coin. Certainly, you don't want somebody with a stable coin that then go and invest on stocks or on Bitcoin or something that is very volatile, right? But so far, what I've seen that companies are doing is things that are conservative, like T-bills, as you mentioned. I think Tether is very heavy on commercial paper, which is not that conservative, but nevertheless, it is pretty conservative. So hopefully they will draw the line somewhere about what to do with this cash that backs the stable coins that allows to produce some sort of yields, because otherwise it disincentivizes the creation of the stable coin itself.
Carlos, switching topics, I want to gauge your thoughts on tokenized stocks. Binance was offering them, now they've decided not to. But to buy a fraction of Tesla's shares, say, what's wrong with that if you're giving retail investors access to something they may not otherwise be able to afford?
Well, those are clearly securities. I don't think that anybody debates whether those are securities, right? Like what we mentioned with the stable coins, there is a question of it, but those are not only securities, also derivatives, right? Because you're basically producing a derivative of another security. I think that from what I read, Binance was actually using a broker-dealer, and so does FTX in Europe. Here in the US, nobody's doing it. I think the only one that did it in the past was Aura, and they did it without a broker-dealer, and they were fine. But both the SEC and the CFTC, because as I mentioned, these are securities and derivatives. I think that there's nothing wrong with that as far as you do it following the necessary regulations and laws. I think it's actually a great thing that people can buy the stock of a company in another jurisdiction where it's not being offered. And here in the US, we have something called ADRs, which are essentially the same thing, right? Like if tomorrow you want to buy shares of SoftBank, because SoftBank is not traded anywhere in the US, the only way for you to buy that is to buy an ADR, which is basically some sort of like if you want a tokenized version of the SoftBank stock that trades in the Japanese market, right? So I think this is great, and we should promote and try to do it. But obviously, we need to do it following the necessary regulations. And in this case, in particular, it looks like they were doing that. And I heard that the Binance basically pulled out of the market because of lack of demand, not because they were doing anything wrong. And there was a broker dealer from Germany involved in the process. It was not just Binance as an unregulated entity doing it.
So, Carlos, I want to ask you about you're launching yield funds, right? You're a couple of them. Can you kind of go into that and what that means for your business?
Yes, so we've had an asset manager called Securitize Capital that we used in the past for some of the security tokens offerings that we've done, and then the last kind of year or so, with all the growth of DeFi and yield generation opportunities that you get on crypto, talking to people outside the crypto space, or even people in the crypto space who are not necessarily very sophisticated, they were like blown away. But you can buy Bitcoin and get a yield on Bitcoin, or you can buy USDC and get like 8-10%, whatever, and they were like blown away. But when they look at how they need to do it, and kind of again going back to the same, the lack of regulatory clarity of whether some of these people providing yield are actually selling or not securities, on whether these short-term interest-bearing accounts are actual securities, then we figure out, well, if there is interest and this is an interesting product, why don't we try to do it in a regulated way? As a traditional security using our platform, we will issue in digital format, but this is security. At the end of the day, we have all the infrastructure to do it, and we partner with a couple of CeFi, if you want, counterparties, Anchorage and Genesis Trading, to provide the yield. And now we're working on a pure DeFi one as well that will provide different types of yields by just going directly into the DeFi world and running some yield generating strategies. So the main idea again is the same thing: is this is a great innovation that the crypto market has. So why not put it in a wrapper that provides 100% compliance and peace of mind for people that want to get exposure to those things through traditional securities.
So yeah, I was going to ask, are we ever going to see the likes of securitized mortgages or credit card debt potentially on DeFi platforms? Is that something you guys are working on? Is that something that we could see happen in the near future?
Look, I love to do those things. Like at the end of the day, if you think about what's the beauty of what we're doing on crypto with securities, is kind of providing access to the long term of capital markets, right? So the same way that on internet you can have a restaurant in a corner of a street and you can advertise through Google, which was impossible before because you couldn't advertise in such a micro way, and this enabled the long tail of advertising and long tail of commerce and many other things. So crypto at the end of the day is kind of the long tail of capital markets, starting with stablecoins as we discussed, and following with all type of securities that you can offer and buy and sell at a very, very micro scale, and then get access to these things that traditionally are very complicated, like borrowing and lending of securities, or automated market makers to provide liquidity to small securities. So I think that hopefully those worlds will merge. We've certainly, from a technology perspective, we've done it and we know how it works. It's just that a matter of how to make sure we do it in a way that the regulators are comfortable, because obviously we are a highly regulated entity, as you guys know. We have a transfer agent, a broker dealer, and ATS, so we have to be mindful of not doing something we're not very comfortable with. But certainly this is something we'll love to do, and we're looking at doing in the future.
Carlos, just finally one last question. Congratulations on your latest 40 million raise. Some of the leaders in that were Morgan Stanley and Blockchain Capital. And your platform at Securitize has over 300,000 investors, as well as supports more than 150 companies. So what are you planning to do with this money? How do you plan to scale? What's the next step?
So the main thing about the raise was that last year we actually purchased a broker-dealer that has a license also called an ATS, an alternative trading system, that will allow us to trade, private securities in the form of digital asset securities, so in form of security tokens on the blockchain. So most of the idea behind the Series B is to move from what we're doing today, which is a decentralized digital transfer agent, very modern, that operates on the blockchain, to then being able to then provide a trading platform both for primary offerings as well as secondary market trading for digital asset securities, which is something that has been a huge promise of the space and where everybody got excited from the very beginning. But unfortunately, very few companies have launched, and the ones that have launched, with all due respect, that they have failed, right?
Yeah. So you're saying eventually we'll be able to trade stocks on your platform through the blockchain?
Oh yeah, very soon. But we'll be able to trade, private securities, right? So that's the main thing. The public stocks, I get the idea of tokenizing Tesla shares to sell them, I don't know, in Thailand, but here in the US, anybody that wants to buy Tesla shares, they just go to Robinhood and buy them, right? I think the part of the market that is not accessible for people is private capital markets, because that's actually where the growth has happened in the last 20 years. If you think about 20 years ago, when Amazon went public, they were a 3-year-old company, and they went public at $300 million. That's it. And then now it's worth $2 trillion or whatever. So people made a lot of money in public markets. These days it's the opposite. Airbnb just went public recently after 16 years of being private and a valuation close to 100 billion, right? So even if they make it to 2 trillion, the upside is gone. It's been happening on private capital markets. So we're very eager on this digitization and democratization of access to private capital markets. And we believe blockchain is the way.
Very